Barak the Yahweh, Barak the Yahweh Shai, Barak the Yahweh, Barak the Yahweh Shai, Barak the Yahweh, Barak the Yahweh Shai. Double honesty, apostles, a great millstone. Honestly, brothers will be pushing this truth and sincerity throughout the four corners of the earth. So this is going to be a relatively short video dealing with the current state of the United States and subsequently entirety of the whole globe's economic prowess, if you will. So the caption, the head title says that the US stock has a 70% chance of crashing. Now I do quite a few videos like this dealing with the economy because it's an important thing to watch. It's a very important thing to watch. You got a lot of people out there that make disinformed decisions. For instance, there's times for something as basic as traveling, there's times when you're supposed to be buying foreign currencies in just a week. Okay, over a period of a week, there's times when foreign currency during a week, when foreign currency is going to be cheaper to buy, and times when it's going to be expensive. But for the vast majority of these people out here, because they like not doing much and not working like how we do it here at Great Millstone, you got a situation where there's a lot of misinformed decisions. So buying houses and exponential debt levels. Okay, everybody out here has got a whole heap of debt, and nobody's got no way of paying it off. And that's just on a person-to-person basis. You scale that up all the way up until the individuals. Well, guess what? All of these individuals and all of these different countries and all of these different governments have got all types of debt, man. And it's come to a point where that they're saying that there's a 70% chance of that debt, defaulting, crashing, market crashing, whatever you want to call it. It's all pretty much the same thing without going into too much detail. So let me read bits of this. I'll speak on bits. But like I said, it's going to be a relatively short video. I'll try to keep it underneath like 14 minutes or quarter of an hour or whatever. Okay, so it says US stock markets has a 7% chance of crashing now. Research, okay? It says the risk of a large-scale correction of the US stock is on the rise, say researchers of the Vanguard Group. They warn that probably in 30% is 30% higher than has been typically over the last 60 years. And why is that? Like I had mentioned before, all of this overspending, okay, for these big government projects and these big bailouts, something was going to happen at the end of it. You was always going to have a situation where someone's going to have to foot up the bill, And as long as nobody's willing to foot up the bill, well, guess what? You're going to have market corrections and this, that, and the third. Like I said, I don't want to go into too much detail because that will require me to pull up all these external articles and it'll be long-winded, really. But really, you're supposed to check this stuff out yourself, okay? So it says here, Vanguard chief economist Joe Davis said, investors do need to be prepared for a significant downturn. All right, is now a 70% chance. And what would you, when you have a good, let's say a Stephen Curry, for instance, right? You got a Stephen Curry and he's a 40 high 40% 3-point shooter. That means to say out of 100 shots, he's putting that ball in 45 times, okay? That's a 45% 3-point shooter, okay? And they say he's one of the baddest dudes to ever shoot the ball and make it to where it's basically he's not missing at 40%. So what does that mean to say when you say you have a 70% free throw shooter? Man, that's not like a bad free throw shooter. That's good, but it ain't great. But what we're saying here is seven times out of 10 that ball is gonna go in a hoop. Okay, that's free throws. So when we're saying that the market is likely to crash, there's a likelihood of a 70% likelihood of a market crashing. That means 7 out of 10. Okay, there's a 7 out of 10 chance that this thing that as the American dollar, okay, this life of decadence, okay, is coming to a crashing halt. But as we have said here at Great Millstone for the longest, that is a necessary event, all right, in order for the chip to be put out. Remember, there's the 3 pillars that make up Esau's kingdom, okay? The military, okay, led by the United States. The financial side, led by the UK, okay? And the spiritual side, led by the Vatican. That's what makes up the 3 pillars of Esau's power structure, okay? And all of those are going to be, all of those power structures, okay, are either going to be changed, okay, All right, for instance, the religious facet of it, they want to change it to where you're out and out worshiping Satan. That's part of the New World Order agenda. The financial side, they want to have it to where you're gonna have an RFID chip within your arm. Okay, but in order to do that, you gotta crash the economy to start first and foremost. So this is all part of it, and also to the military. You're gonna have it to where they want a equilibrium. If you watch the film Equilibrium, they want a police state like that. Or I suppose police state is good enough a word to say what I'm trying to say. Okay, and so it's about having reasonable expectations. And they're saying having reasonable expectations is that what the United stock market has a 70% chance of crashing. That's reasonable expectations. So let's say if you had an unreasonably difficult what you call shopping a holiday season, okay, because you got the holidays, the so-called holidays coming up, which those ain't righteous holidays, those are pagan holidays. One of the reasons why the Lord is coming back to destroy this place, okay, you got these pagan holidays that are coming up. People are uptight, okay, the market works in a cyclic form. So if people are uptight, that means more people are going to be uptight. That means more people are going to be uptight. Why? Because the person that's going to spend the money at Starbucks ain't going to spend it anymore. So the person that's working at Starbucks is not going to get that chunk of change anymore. They're going to get fired. And therefore, the money that they would have had, the disposable income that they would have had working at Starbucks, it ain't going to go to the next level. Okay, so it's cyclic. So that's going to mean what? That means you're going to have a cyclic downturn. Okay, so that's not unreasonable. Okay, so if you have a bad so-called holiday season, unreasonably a bad one, this is more likely to happen than anything. Okay, all right. So it says it's about having reasonable expectations. Having a 10% negative return in the U.S. markets is in a calendar year has happened 40% of the time in the 1960s. That goes with the territory of being a stock investor. Okay, the economists said it's unreasonable to expect rates of return which exceed our bullish forecast. All right, which a bullish forecast is the type of market. I forget the ins and outs of it. And like I said, to really go down, to really do all of this, you have to really sit down and go through all of these technical terms. And really, this is like my lunchtime video, and I don't really want to do that at the minute. Okay, so excuse me if some things are misquoted or misdescribed. I think it's going to be enough. Okay, so it says in this annual report, the company has told investors to expect no better than 4 to 6% returns from stocks in the next 5 years. So, if I'm not mistaken, that's the focus forecast, okay, of what they expect to get back on what they invest out there on the stock market. Which, if they're saying it's going to crash, that means to say what? That they're having diminishing returns. Meaning to say what? That those whether that be returns in terms of securities, and those securities are not really being paid off, okay, because those debt-based securities and people ain't paying it back. Well, guess what? That's going to diminish your returns, and as a result of diminishing returns, you're going to have a downturn in the market because those same investors are not getting the returns that they expected, and they can't reinvest it back elsewhere. That's how business works. Okay, so let's carry on with this. It says the risk premium, whether corporate bonds are spread or the shape of the yield curve or earning yields for the stock markets have continued to compress, said Davis. We're starting to see for the first time some measures of expected risk premiums are compressed below areas where we think it could be associated with fair value. Okay, so that effectively what I should be saying is that where it would be a sure return, like you invest some money into a particular a bond or whatever, or a stock. Okay, now you're seeing it to where you're not really getting what you was expecting to get. Okay, the risk on it is getting very risky now. Okay, people ain't got no money anymore, man. Okay, it says overreaching is not a better solution or for a lower return environment than getting out of the market entirely. Okay, so you would overreach which meaning to say over expectation of a return on a particular stock. Okay. And he expressed worries that after hearing lower returns, some investors will view that as a catalyst to become more aggressive to generate returns. So if you're seeing the market move in a certain direction, you might think, okay, boom, let me just invest in it. For instance, if you look at a country as an example, and you see that people are starting to stop investing in that country, well, you might buy up all that land there for cheap and get a nice good return at the end of it. Because why? Because it's cheap when you bought it, but the value can return back up. Okay, but he's saying that's not really a viable solution out here. And this in the environment that they're living in. Okay, and he says, and he expressed worries that after hearing lower returns, some investors will view the catalyst to become more aggressive to generate more returns, and that they have used than they have used in recent years. Now, why did it say it's worries? Okay, because like I had just described, that situation actually happened in 2008. So you had it to where people overreaching, man. Okay, and what happens when you overreach? Now you got a bad investment, but investments are usually stacked up. Okay, not to go too much into the economic side of things, but what happens is you usually stack them up, man. Okay, and so if one falls over, okay, all of them is going to be linked together. Okay, a good example of that is the housing market, and you had those securities that they had within the banks, and one of those, if one of those people stop paying that security, with that whole cake, if you will, or that whole layer cake of securities will start tumbling down, man. Okay, or ricochet. Okay, so it says you need to stay invested because of the lower expected returns. All right, don't become overly aggressive. The next 5 years will be challenging, right? And investors need to have their eyes wide open. Okay, U.S. stocks have been on a roll since Donald Trump's presidency. Now they say that, but really it's been on a roll since 2000, way before 2008 crash. And like they're saying here, it's more likely to be crashing again, okay, because you got the same situation, same problems, auto loans, housing loans, people buying, just decadence, just straight up decadence, over consumption, man. And people put it on the card and say they'll pay it later, and that's all part of the problem. So, I mean, hopefully I went into that within enough detail. Like I said, I'm just going off the top of my head at the minute. Really, to do this articles like this justice, I would have to be at home and do a special on it, and maybe when the next one pops up, I'll do so I don't misdescribe something or misinform in any way, shape, or form. Nevertheless, the article really speaks for itself, man. Okay, in that the U.S. stock market has reached 70% chance of crashing. Okay, and that's a beautiful thing. Okay. So with that, I'm going to say, all praise unto Yahweh from the outside. Double honestly, apostles of great millstone. Honestly, brothers, let me pushing this truth and sincerity throughout the four corners of the earth. All right, shalom.